I think part of it is it's a hard thing to equate to because I went to this economic summit that Wells Fargo had on farming, right? And they put a graph up on all their customers, and there was like 20% were very efficient and very, very profitable in the same commodities. 50% were good, and 30% were horrible, right? And that's the operational, extracting money out of the land and returning it, right? So part of the thing is there's a gazillion people out there owning this land that don't really maximize the property. They don't own the facilities to harvest it, process it, and sell it. So they're not in the whole chain, right? So they're not making hardly anything on these ranches, even though they're worth way more than they ever dreamed. Today they're worth a lot more than they ever dreamed possible. But there's upside in those things, which will drive the valuation up. The other thing is, just like everywhere in the world, the usable land is shrinking with water concerns and weather concerns. And if you have good property with good water districts, the investment community, the private equity guys, the pension companies, the Prudential, biggest buyer here, they're looking 20, 30 years out and saying, we want to own this land, we'll pay more. So, my first ranch I bought for $1,000 an acre. Price it's now worth $40,000. It's only been 20 years. It's not any better or worse than I got it. You know what I mean? It's just there's a huge demand for really good land, huge. That's going to continue.